Credit Suisse on Thursday said it was taking decisive action to strengthen its liquidity by borrowing up to $54 billion from the Swiss central bank after a slump in its shares intensified fears about a broader bank deposit crisis. The Swiss bank's problems have shifted the focus for investors and regulators from the United States to Europe, where Credit Suisse led a sell-off in bank shares after its largest investor said it could not provide more financial assistance because of regulatory constraints. Regulators in the private banking hub on Wednesday had sought to ease investor fears around Credit Suisse, which added to broader worries sparked by last week's collapse of Silicon Valley Bank and Signature Bank, two U.S. mid-size firms. Asian stocks had extended Wall Street's tumble on Thursday, and investors bought gold, bonds, and the dollar, leaving markets on edge ahead of a European Central Bank meeting later in the day. The bank's announcement in the early European morning helped trim some of those losses, though trade was volatile. Bank up to 50 billion Swiss francs. Investor focus is now on any action by central banks and other regulators in Asia to restore confidence in the banking system, as well as any exposure regional businesses may have to Credit Suisse. In a joint statement on Wednesday, the Swiss financial regulator FINMA and the nation's central bank sought to ease investor fears around Credit Suisse, saying it meets the capital and liquidity requirements imposed on systemically important banks. They said the bank could access liquidity from the central bank if needed. Credit Suisse said it welcomed the statement of support from the Swiss National Bank and FINMA. Credit Suisse would be the first major global bank to be given such a lifeline since the 2008 financial crisis, though central banks have extended liquidity more generally to banks during times of market stress, including the coronavirus pandemic. SVP's demise last week, followed by that of Signature Bank 2 days later, sent global bank stocks on a roller coaster ride this week, with investors discounting assurances from U.S. President Joe Biden and emergency steps giving banks access to more funding.